The stock market's hitting record highs. Job numbers look great. But why does everything still feel so expensive? Why do so many Americans feel broke in a booming economy? Welcome to Econolocast, where we decode the headlines to find the real story behind the numbers. Today, we unravel the Trump economy. Part 2. 2025 was supposed to be the comeback. But is it just a mirage? Let's break down what's really happening, beyond the tweets, the rallies, and the viral headlines. Because sometimes, growth isn't the whole story. From 2017 to 2019, under President Trump's first term, the U.S. economy was humming along. GDP peaked at 2.9% in 2018. Unemployment hit historic lows. Corporate profits soared. But then came COVID. And everything changed. The economy tanked in 2020, the worst quarterly collapse on record. What followed was massive stimulus, record deficits, and inflation. Fast forward to 2025. Trump is back in office. The numbers? Mixed. GDP unexpectedly shrank by 0.5% in Q1 2025. But unemployment stayed low at 4.1%. Consumer spending growth nearly stalled at just 0.5%. So why are we calling it a recovery? Here's the paradox. On paper, America is growing. But on the street, people are struggling. Inflation eased from 9% in 2022 to 2.7% in 2025. But prices of essentials, rent, groceries, healthcare remain sky high. Real wages? Up just 1.4% YOY. Median income in 2023? Roughly the same as 2019. That's a lost half-decade in household buying power. It's like running on a treadmill that's speeding up, but your paycheck isn't. This isn't just numbers. It's a lived experience. Welcome to the headline economy versus real economy. Trump's second term brought back aggressive tariffs, especially on China and the EU. Businesses rushed to import goods before duties hit, causing a plus 37.9% surge in Q1 imports. But that front-loading distorted GDP, subtracted nearly 4.7 percentage points from growth. Exports also fell. The trade deficit widened. And who pays for tariffs? You do, through higher prices at Walmart, Target, Amazon. Tariffs may look tough on paper, but they hit consumers hardest when they least expect it. Jobs are everywhere, true, but are they paying enough? Labor force participation is still below pre-pandemic levels. Real hourly earnings? Barely keeping pace with inflation. Many households report making more but affording less. Childcare, rent, and food now take a larger share of household budgets than in 2019. Americans don't feel poor because they're lazy. They feel poor because their dollars buy less. Meanwhile, Wall Street celebrates record profits. Corporate earnings up. Stock indices at new highs. But the median household? Flatlined. The internet exploded with the growth versus squeeze narrative. Republican commentators shout, "The economy is roaring under Trump." Progressive voices counter. GDP is up, but we can't afford rent. CBS called it a tale of two economies. Social media coined terms like real-life cost index and invisible recession. The truth? Both sides have a point. Growth can be real and still leave people behind because headline stats don't pay the bills. Real incomes, rent, groceries, and debt burdens do. So, what policy choices ahead? Avoid tariff shocks that distort growth. Focus on real median incomes, not just GDP. Support household resilience during downturns. Be honest with the public about trade-offs. The Trump economy isn't broken, but it's badly misunderstood. What we measure matters. Let's go beyond averages and dig into how Americans really live. Because an economy that grows on paper but shrinks in the grocery aisle isn't truly working. Comment below. Have you felt the squeeze despite hearing that the economy's booming? And don't forget to subscribe to Econolocast, where we make sense of the economy, one story at a time. Until next time, keep thinking critically and economically.